Welcome back to the Investable Podcast. I am pleased to welcome Douglas Boneparth. Douglas is the president of Bonafide Wealth. He is a regular contributor to CNBC and other financial news platforms. He has the goal of helping promote financial literacy amongst millennials and help them build long-term wealth. Douglas, pleased to have you on the show today.
Great to be here. Thanks, Cameron.
I know you are a regular contributor. I was watching some of your stuff before we ended up filming today. But maybe for our audience, if you want to take a quick second to highlight the work you do with Bonafide Wealth, maybe some of the issues you're seeing amongst millennials and younger investors out there, and how you're helping with that.
Yeah, absolutely. So I started this firm about 8 years ago now. So eighth year going. To find a way to provide relatable financial advice and planning services to a particular demographic, and that's millennials. I'm turning turning 40 this year, and I'm tired of saying that. Turning 40. When I started doing this, we were in our 20s, and I think on the older end of the millennial spectrum, pretty traumatized. I started my career in New York City in October of 2008, and a lot
Oh,
of my
wow.
peers we kind of made our way into the workforce at the absolute worst time imaginable. And it was, to me, a call to action. Like, how did we get here? What can we do about this? And I started thinking about what the financial considerations and realities were for my peers who were struggling at the time. And it didn't matter level of education. I mean, I was looking to my then girlfriend, now wife, really as the example of someone who went to law school, took out hundreds of thousands of dollars in student loan debt to do that, under the premise that all will be okay if you simply go get a good job that this degree would allow you to get. And you've heard this before, and that simply wasn't something that was available, in 2009 and 2010. So now you have a generation at this cohort at the older level, really, saddled with debt, underemployed or unemployed, and wondering how they're going to make a go, at their careers. And I didn't view that, I viewed that as an opportunity, is what I did. So as I was taking out another 6 figures in student loan debt for our household to go to business school, I looked around my classroom, and a light bulb went off. Like, if we help all these hardworking, high achieving individuals today, when they need this help and there might not be any money to invest and the needs might not be as great as they're going to be, but if you can be the person that they go to when they get there, you're going to have a nice business for yourself, and one that you ultimately have impact. You can create impact. So that was the idea here, 10 years ago, formulating, how I was going to operate a traditional wealth advisory financial planning practice, but gear it towards the next generation of investors. And it worked out. It was a long game that's been extremely interesting and rewarding, and at many times difficult to play. So that's what the firm is all about, and it has now provided itself as a way to give relatable financial advice and planning services to high achieving. I think we're still young professionals, but here we are.
Well, not after you turn 40.
Yeah, not after you turn 40. And I'd say, one of the things that I was particularly good at was building credibility and a
Yeah.
brand around that. There weren't a lot of advisors using social media, creating memes. I mean, I remember stumbling across like Gary V years and years and years ago, and I'm a fan of his, certainly from even more so from the early days. And I was like encouraged by this idea that you could go build a brand and market yourself online, and you didn't need permission for anyone to do that.
Yeah.
And I took that to heart, and I'd reach out to, major media outlets and see if I could write for them, see if I could do a TV spot, tried to provide value to reporters, editors, producers, and one by one, built that recognition. And that was able to lead the way into contributorship for CNBC and Investopedia, and almost every mainstream media outlet imaginable allowed me to then build a social media profile based on all of that. So I owe a lot to them, but also a lot to studying communications and public relations. Really kind of came through for me. I never thought learning about that in undergrad would turn out to be a really great resource for me building a wealth management firm.
Yeah, it's very interesting because, typically it was, well, I know the stat is there's more advisors over the age of 70 than under 30 right now.
Yeah,
And they gear their practice to service typically older individuals because the model is an AUM model where you only want to focus in on high net worth people because that's where you make your money. You're not making it on
oh, yeah.
that fee based account necessarily where you're charging for advice rather than the assets you're managing. I also thought it was very interesting. Like what we have seen, especially since 2021, is that the big influx of retail investors into the market, a lot of them focus in on following someone else, whether that's someone in their family, someone in their friend circle, or someone like yourself, and like looking to them for advice on what they should do. And I think a lot of that is born from social media and that leader follower trend. So it's very interesting to hear you pick up and be able to capitalize on that.
Yeah, yeah, it's been one heck of a ride to say the least. You never know. Yeah, you put in the work and something good's going to come out of it, and here we are.
So with that said, I'm curious to hear your thoughts on, what's going on in the market today. If you take a look at the S&P, it's essentially at new highs. Nvidia is parabolic.
Yeah.
Really, all of it's been led by the Magnificent Seven. You look at the S&P 500 relative to the S&P equal weight. A lot of it is large cap driven. You're not seeing the participation lower on, and then you're also seeing now Buffett starting to trade out of Apple and Bezos starting to sell some shares. So I'm curious to hear your thoughts on what's going on.
It's always hard to read into the decisions of billionaires, and I think it's harder to read into like someone like Jeff Bezos selling Amazon shares as a proxy for how he feels about the overall market. Maybe you could make a stronger argument of how Warren Buffett feels about Apple, specifically due to him selling shares of Apple. But it's really hard to put yourself in the driver's seat of these individuals and make these broad, sweeping statements. But let's shift gears over to just the Magnificent Seven and the broader market in general. Yeah, man, those mega caps are really kind of leading the way on the back of this AI fueled theme. The future is now.
Yeah.
Yet where are all the cool AI tools? To improve. Where's my AI bot to put my kids to bed? And take that. We'll get there. Of course, I'm very very bullish about all things GPU driven large language models ultimately to create deflationary effects throughout society. For better or worse, we're going to see that. But yeah, it's not quite. Is it diversification when you have 7 stocks really bringing up the biggest index out there? I mean, it's starting to seem like we're creating a narrative around this is dangerous, and meanwhile the statistics would show you that all-time highs beget new all-time highs. But it doesn't change the question, like where's the where's the breadth, right? Where are the lower end, where are the mid caps at, which are increasingly more volatile as we see, just with not to timestamp this podcast, but we had an interesting, inflation led sell off, just this week. They get those smaller companies kind of get rocked by that. All eyes on the Fed, if you ask me, right? What would spur, that market breadth, that uptick there? Yeah, probably lowering rates, but for the right reasons, right? Not because things are cracking in the system and and we're losing jobs. Fed's mandate is control inflation and make sure jobs aren't hemorrhaging here. Jobs aren't hemorrhaging, other than that last print, which wasn't crazy hot, but was hot. I think everyone just wants to see inflation go down and down and down so that the Fed would get around to lowering rates because, hey, we've kept it higher for longer. We've gotten, stability with jobs and now stability with inflation. And that didn't happen earlier this week. But yeah, I got to give some credit to the fact that we're only seeing this market led by these mega caps, and has to justify what's going on here.
Absolutely.
I can bite down on the argument that there are cycles and cycles ahead of the competition, and all the main players want are their GPUs, and no one's really caught up.
It
a little
reminds
bit
me
of
of like
attention.
Intel and AMD a few years ago when,
Yeah,
Intel was the leader on the chips, and then AMD started coming out with lower price point objects. Now you're seeing Intel completely fall from grace. And I wonder if like Nvidia will experience a similar sort of fate. To your point, like Sam Altman coming out saying $7 trillion in new chips, like they're going to flood the market. You're going to have an onshoring probably of what's leaving Taiwan from geopolitical risks back into the US, and it's going to I imagine, impact NVIDIA quite a bit.
yeah. And now you have, well, they're not a chip manufacturer; they're more of a chip designer. Um, ARM's getting all this attention, having spun off from SoftBank and going public once again. It seems pretty wild out there in the semiconductor space and the AI space. When are we going to have utilities and applications to give to people to say, holy shit, this is impressive, and it has to be more than, at this point, chat GPT, right? Which is awesome. I love playing with it.
Yeah.
If you're creating images in Mid Journey, holy crap. Scary good. I mean, it makes Dolly, if anyone's playing with that, look terrible. And Dolly's pretty good at generating images.
Yeah.
But what people are doing right now, at least on having fun and the creative front, just through those utilities, is pretty cool. And there are plenty of apps improving people's workflow and life, but it has to get to a point where every human being on Earth, it's a little much, but basically large scale adoption, and we're not quite there yet. We're just in a chip rate. We're in who can purchase the most Nvidia processors race right now. Microsoft and Meta scooping these things up without really understanding fully what they're going to do with them. All they know is they need to get as many in their possession as possible.
I guess, yeah, I'm just thinking about it now. There's obviously a correlation before with Nvidia and other GPU manufacturers and the price of Bitcoin. So then you have, Bitcoin starting to spike again, and then you also
Yeah,
have the AI trend where I know, like, the old adage is you should own the pickaxes and shovel manufacturers, not the gold miners, but it
yeah,
seems like we're almost taking that to like a too far of an extreme.
yeah. I remember one day I was in a Twitter space talking about free Nvidia earnings, and my question was, who are all the secondary players here to supporting, this company? Like, where are they getting their materials? How many of these companies are publicly traded? You would think that they're going to be offered business for years and years and years to come. So it's certainly very interesting. We're living in a semiconductor world right now. And Nvidia's the talk of the town. But from my, just to bring it back to, what's this mean for financial planners and advisors like me? It's great to talk about. For clients who own the stock, they're obviously very happy. But by and large, we're talking about clients who are solving for financial planning goals, have busy lives, chasing kids around the house, and just want to know that they're moving their way towards their financial goals, like financial independence or purchasing a home or getting their kids to college someday. When we get out of our finance talk and nerding out about this stuff, we come back to regular everyday people who are working really hard towards their financial goals, and those are the people that I'm supporting with what I do every day.
So on that note, I know, I think you mentioned before, the focus around index investing for your own practice. Now, you look at the S&P 500, one of the most broadly followed indices. To your point, do you think with the excess contribution from seven names, it introduces a risk now to index investors out there where you're becoming ultra concentrated, and if since they make up such a large portion of the index, if there is a sell-off in those seven names despite what's going on in the other 493, it will end
Yeah,
up impacting index investors quite significantly.
I mean, it will have an impact if if there's a deep sell-off, specifically in tech and in those very large companies. But if I was looking at an 80-20 portfolio, I'm going to see maybe 34% in the S&P 500 of the overall portfolio.
Yeah.
Maybe you'll see another, 12 to 14% in mid caps, 7 to 9 in small caps, and then you have your international components, emerging markets, and fixed income is 20%. So, that's the point of diversification, right? Is to be able to dampen the effects of volatility in any one specific asset class or multiple asset classes. So, we're going to see ebbs and flows, and we're investing over long periods of time here. 5 years from now, are we going to be talking about how the Magnificent Seven is still leading, large caps? Maybe, probably not. 10 years from now, safe to say definitely not. I mean, there'll be new market entrants, there'll be events that take place that, maybe some of these players are still important, but not to the tune of, having this kind of control over the S&P 500. You never know what you're going to see. And when we plan around on certain futures, this is why we invest the way that we do.
It makes total sense. I liken it to like the dot-com bubble though, where, there is that worry on, do you have a pop? And these things can end up having a massive drag on people's portfolios, and it takes, 2 years to end up recovering from that. And I don't know. I think you probably have a few, like Nvidia is definitely overpriced right now. I don't know if I'd short it. It looked quite expensive to go and short it. And, the market can remain irrational longer than I can remain solvent. But if you have a similar sort of pop to what you did have in 2001, and it takes a multi-year recovery because the market's being so bullish right now, especially on AI.
Yeah, yeah. Like we were talking about a moment ago, I mean, take Nvidia going parabolic. I mean, how many times are you going to hear someone say, like, I know how this is going to end? Like, how long can that continue on for? Even looking at Meta, for example, how long before these price moves need to be justified by, revenue or actual, business? So, put that in the hands of an investment advisor or financial advisor. Are they going to really be making tactical moves around that? I mean, no. If they're, index investing across the board, they're going to have to accept whatever price action comes from, those components. And, clients are going to enjoy what they're receiving right now, but they fully understand, because it's your job to educate them how things work, that there'll be drawdowns. I mean, in any one given year, the number of 5% drawdowns is more than one.
Yeah.
So, I tweeted out yesterday, investing is, losing 25% in order to gain 250%. If you don't realize the reaper is always in some cycles, then you're playing the wrong game. Things don't go up forever, and they never will.
Yeah, I think, maybe on that note around diversification, I know you're a Bitcoin fan. The US just launched a few Bitcoin ETFs. We see the price continuing to go higher. What would you rather own? Would you rather own the ETF, or would you rather own the raw Bitcoin?
Yeah, I'd rather own the Bitcoin itself. And I do. I was very fortunate to learn about Bitcoin and blockchain technology a little ahead of, the masses here. In 2013, went halvesies on a miner with a buddy of mine and my wife. In 2014, and started mining Bitcoin. Learned a lot, learned a ton. Just held on to it. Now stuck it on a ledger. It sits there. And who would have thought we got to the day where, we package it in an ETF? And I was very open to that idea, and a proponent of it. Just because one of the things I learned along the way is, man, people like easy. People don't necessarily like learning new things, and if you really want mass adoption or acceptance of this, you probably need to put it in a structure that people are mostly familiar with. Like, people know how to go into their E-Trade account and put in a ticker symbol and place a market order. What people are unfamiliar with is, sending money from their checking account to a crypto exchange to buy
To
for the first
FTX.
time.
Yeah.
Yeah. An exchange that hopefully doesn't, go under because of corruption. A whole other issue. And, go buy some internet money. Trust a trustless system for the first time.
Yeah.
Hope that exchange doesn't blow up. And then, if you're really caring about self-custody, moving that over to a cold wallet, something like a ledger, and then just sitting tight. Yeah, I don't know too many 65-year-olds that are going to do that. And they're the ones with the money, so if there's going to be real allocation, I guess institutional level, products needed to get involved here, hence spot Bitcoin ETF. Um, I don't see how it's not, good for price action in terms of, the price of Bitcoin going up. I've been on TV and have equated it to digital gold. That's not, a
Agreed.
narrative that anyone has, put into my mind. Is what I think. I think there's room for digital store of value. I don't, I know a lot about Bitcoin, but I don't really think you need to take it too far if you're just trying to help people understand a little bit more about what it is. I just feel there's room for digital store of value. If you can, people fighting over which monetary construct is better, fiat, shiny rocks, or ones and zeros. Take your pick. What do you believe in? I do believe Bitcoin has a place, and I think it's as good as, if not better than gold as a vehicle that can store value. And these are extremely interesting times for the main cap cryptocurrency. And we're seeing a little pop right now. Is this because the ETF is finally shaken off its outflows at a grayscale, and now we see nothing but inflows going into the market leaders? Yeah, I mean, there's a lot of money now in what can clearly be called a successful debut of spot Bitcoin ETFs. Certainly out of BlackRock and Fidelity in the top two spots, Bitwise. Not doing a bad job either here. You love to see it. And with a halvening, with a supply constraint coming up, just in a few months' time, perhaps things get even more interesting. And the only knock I have here is, all the things that Bitcoin's kind of built to do, like it's a inflationary hedge. Like, what did it do when inflation was getting a little crazy here?
Yeah.
Not much. You thought that would be its big moment. And even the ETF debut, at least in the beginning, was very anticlimactic. I think a lot of that had to do with that SEC Twitter account
Yeah.
fiasco and the rolling out of it. All the air kind of got sucked out of the balloon the day before it actually debuted. There was a slight little god candle there on the fake news. I think it went from like 42,000, 48,000, like that, and then
Back down. Yeah.
in the red because it wasn't real communication.
I think that, so we in Canada we launched a few crypto ETFs, both Bitcoin and Ethereum, a few years ago. And I think the big benefit we saw up here was the ability to add it into tax reserved accounts. So like equivalent to
Yep.
like a 401k and IRA
Yeah.
account.
All
And
right.
it
Yeah.
let people, put their retirement savings into it, to your point, instead of having to go to like a sketchy exchange. What
Yep.
I find the most interesting behind this, and curious to hear your thoughts, is it's essentially like the government, the SEC, is legitimizing an area they have not wanted to legitimize for quite some time. So I'm curious to hear your thought on that, especially because like the government has their biggest weapon is currency. So if you're
Yeah.
starting to give up some of that control to an unregulated space, what does that mean for governments?
Yeah. What does it mean for governments? Yeah, there was a big fight to get this thing out there. Just yesterday, Joe Kiernan and Gensler kind of going at it, on Squawk Box, when it came to how decentralized Bitcoin is. It was interesting to see that challenging going on here. But yeah, when fiat is the way you ultimately have a great deal of control as a government, you're probably, and same would go for central bankers. You're looking at something that is disruptive towards that. Conspiracy theory hat. Maybe that's why ETFs were created, to give institutions, the ability to control, maybe manipulate the market a little bit. I mean, I don't know how conspiracy that really is when it's
Probably
kind of
true.
happens, but it's kind of true. Just look at gold and GLD and the settlement that JP Morgan had over that, all those from all those years ago. Will we see that with Bitcoin as well? I don't know, but Fidelity and BlackRock certainly own a great deal of Bitcoin now that they have put out the ETF there, so it'll be interesting. But at the same time, like the fact that there is a ETF that's regulated by the SEC and it's a spot Bitcoin ETF, for financial advisors, this was a big deal because we really, most FAs or IAs would be told by their compliance department, don't touch or talk about cryptocurrency with a 10-foot pole. You can certainly, I always viewed the stance of you can educate around this. And if your clients are asking to be educated around something, it's, your fiduciary obligation to do that. So luckily for me, I've had a lot of experience with it and I'm able to share that experience and education with clients where, the line is drawn was you can't really put a recommendation to buy or sell, crypto. And now you have an ETF that fits snugly inside a brokerage account, just like all the others, shy of your own compliance department being, hey, look at, Vanguard, for example, they made the call to not be able to position the ETF in any of their client accounts. Any broker dealer can make that same decision for their advisor force and what can and can't be done in their accounts. I haven't noticed any restrictions on my end at this point, and was able to allocate to a Bitcoin ETF for a client that wanted that to happen. So kind of a green light, if you will. Yeah, there is that feeling there's somewhat of a, hey, this is now readily available to be positioned for client portfolios. And to me, that's super exciting, that we can put a 5% allocation on an 80-20 portfolio for a client that's very interested in it. And again, while I do believe, hey, you're probably better off owning Bitcoin itself than a spot Bitcoin ETF, that's my bias. The reality is people aren't going to do that. Whether they just want to outsource this function of their life, most do, and working with a financial professional, or I don't know, most people are also lazy. They want the easiest way to go about doing something, and this is a hell of a lot easier, as we talked about earlier, than all the steps that you need to go through to actually purchase Bitcoin and get self-custody over that.
Yeah, it's definitely one of the easiest ways to gain that alternative diversification in your portfolio outside of a VC, a private equity investment that is not liquid and you can't trade in and out of.
Yeah, fully liquid alt allocation to something that seems fairly uncorrelated to the market, although pretty correlated to the Nasdaq, in recent years. But best performing asset class in 10 years. Let's see how I'm very, very interested to see how it performs over the next 10 years.
Yeah. Likewise, I'm a big Ethereum fan, but we'll save that debate for another time.
Yeah, no, Ethereum's cool too. I mean, getting into smart contracts and proof of work is a whole other animal and a whole other beast. I'm sure all had fun in the NFT days of yesteryear, and by yesteryear I mean 2 years ago.
Yeah. It'll come back.
It will come back because we'll see its application only improve. We'll see it again. Not sure, yes, we'll see it in the form of protecting intellectual property, art, music, and things like that. I think we just got our first little taste of that, and then it kind of just went in the direction of pixelated turtles and frogs and squids, which might not be the best use case, but it was fun. It was fun and very efficient of sucking excess liquidity out of the system.
Yeah, all the stimmy checks getting absorbed into NFT projects.
Into cryptodes.
Yeah. Well, Douglas, maybe we'll put a pin in it there. If anyone's interested in following you, learning more about Bonafide Wealth, or I know you have quite a big following as well, where can they find you?
Yeah, best place would be X, the app formerly known as Twitter. All social media handles are at Doug Boneparth. You can visit bonafidewealth.com. Simple Google search will get you anywhere you need to go. Also, what we didn't talk about was a great newsletter that I write with my wife called The Joint Account. A lot of our focus is on helping couples navigate money in their relationships. This is our kind of our next iteration of the practice now that millennials are all grown up. And you can check that out on Beehive, which is the joint account .beehive.com. Again, Linktree and all the bios on social media will get you to all of these things. Highly, highly recommend you subscribe. And if you have a partner that's wanting to learn about money too, because you have to, get them to subscribe as well.
Okay, amazing. Yeah, we'll leave a link in the show notes for everyone to take a look as well. Douglas, it was a
Okay.
pleasure. Look forward to having you on in the future.
Thanks for having me.